Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. For all trade, we'll use the 5% money management rules and apply stop loss in all trade. This video is for educational purposes only. The title of the video is how to day trade the first week of the month. All right? A lot of traders can day trade, but they do not understand the protocols that the professional are following. Okay, it's one thing to know how to trade. It's another thing to understand the market, what is taking place on Wednesday, what is taking place on Monday, how the market behave on Friday, how the market behave during the first week of the month, how the market behave during the last week of the month, how the market behave at the beginning of the year, how the market behave at the end of the year, what the professional are looking at. All right, this is the difference between a professional day trader and an ordinary day trader. In this video, I will share with you some of the experience, some of the things that I've learned during my trading life, okay, and the things that you can put into use, okay, to improve, okay, your day trading strategy. Before you can place a trade, you must find a valid setup. Then you wait for a signal, and then you look for a low risk entry point. This is what we call the trading drill. If you are day trading and you do not understand what is the trading drill, you can go round. The next thing that you want to understand is to understand other market participants, because you are not alone in the market when you are day trading. For instance, if you buy, okay, another person is selling. So you want to be on the right side of the market where you can move with the price alone, okay, where you can stop fighting the market, all right? So if you understand, I have recorded some video recently which we call how to day trade on Monday, how to day trade on Wednesday, how to day trade on Thursday, how to day trade on Friday. It's very important for traders to watch those videos. A lot of traders spend most of their time learning the technical analysis, okay? They use a different type of trading system, but they don't want to understand, okay, how to trade like a professional trader. There are decisions that are made, okay, there are economy news that will affect the market. There are behaviors in the market. There are market stable data. There are market principles, but there are also market protocols. What do we need to know during the first week of the month, okay? What the professional, okay, are looking at, what are they paying attention to? So for instance, if you do not know what is taking place during the first week of the month, you can quickly get into trouble during the first week of the month. A lot of new traders, beginners, okay, even some of the experienced traders get into trouble during the first week of the month because they don't understand what is taking place, okay? And sometimes you may see that they have a winning trade the previous week, and comes the first week of the month, they give everything back. There are a lot of economy news during the first week of the month. Before I forget, I need to tell traders that the best week for day trading is the last week of the month. I will be recording a video which we will call how to day trade during the last week of the month, and I will explain to you what is taking place during the last week of the month. All right, so today is what? Let's see the calendar now. Okay, so we see the date. Today is the 2nd of June, 2014. This is the 2nd of June, 2014. The time in London is 4 minutes past 1 p.m. In New York, 4 minutes past 8 a.m. Now, you need to understand what is taking place is that a lot of people jump into the markets hoping that they will get something out of it, but it doesn't work like that. You must have a plan, you must have a strategy, and most importantly, You must understand what is taking place in the market, what other market participants are paying attention to, what the hedge funds are paying attention to, what the banks are paying attention to, what the pension funds are paying attention to, what the professional day traders are paying attention to. Once you stay in tune with the winning side, so to speak, the winning traders in the market, you will be able to make a better day trading decision. I encourage traders to watch the full length of this video and to remember everything that I said, even to take notes, and very important, to put into use. Okay, let's get started. So today is the 2nd of June 2014. This is the first week of the month. Okay, so the week has ended last week. So on a monthly candle, we see that a monthly candle has closed. One thing I want trade to click for you all the time, whenever a candlestick, bar is closed, decisions are made in the market. Either on the hourly chart, when the hourly candle is closed, on the top of the hour, you can, sometimes day traders enter the trade only to lose and to see the trade quickly go in the direction that they were expecting. One of the reasons why this is happening is because they didn't wait for a candle to close. Suppose you want to buy, and the time of the day is, for instance, 10 past the hour, You can wait for at least for the 30-minute candle to close before you enter the trade. Or you can wait for the hourly candle to close before you enter the trade. The same thing, at the beginning of the first week of the month, professional go to the monthly chart. You must do exactly the same thing. First week of the month, before you place any day trade, you must go to which time frame? The monthly chart. If you do not do that, you are trading blindly, and you can quickly get into trouble. So I'm looking at Starbucks Corporation. This is a company that sell coffee and nice drinks, in many cities in the world, So if you never heard about Starbucks, you can Google it, You will see Starbucks. They sell coffee, mainly coffee, chocolate, and drinks, This is American stock, and I go to the monthly chart because if, for instance, I want to day trade today, this stock, I must go to the monthly chart. What are we looking for? We don't just look at the chart, We want to know exactly what we want to pay attention. We want to see a market pattern. There are 3 market patterns: the rising channel, the declining channel, and the horizontal channel. On this monthly chart, we have a rising channel. Yes or no? Now, if I draw again, the median line of this monthly channel, you can see that the price, if you accept that as the median line, the price retesting, the median line of this channel. But there is something else I want you to pay attention to. Get this into your head. There is another market pattern within this rising channel. You can see that for few months, we are on a monthly chart, the price is consolidating. So because we are day trader, we want to pay attention to the short term, trend. Very important for us because we don't want to trade the price. We are not long-term day traders. We are not long-term market participants, though we will use the higher time frame. But when we are about to enter the trade, we will focus on what is happening now. The momentum. So we can see that on the monthly chart, the price in a rising channel, but for nearly 4 months, it has been consolidating between these 2 horizontal lines. So I want traders to remember that this stock is bullish, and traders must give priority to bullish signal because the price is the rising channel. But right now, the price consolidating between the 2 channels, this horizontal channel, is what we call a balanced market. Horizontal channel is also a market pattern. So these 2 lines that I draw here, if I extend them a bit, in fact, what I will do, I will use the horizontal line. So I can see it when I switch to the weekly chart. Pay attention carefully. So at the beginning of the first week of the month, you will go to the monthly chart. If you forget that, and then you remember quickly, correct yourself and get back into line quickly. You don't want to trade against the best traders out there. So I'm going to color my horizontal line now, okay, into red. I think red is good, okay, and into red, okay. So if we talk about if we call the rising channel as a long-term price direction, which is bullish, we can say that the medium term, which is the horizontal channel, is balanced market. Though we must give priority to bullish signal in this case, okay, because it's priced in the rising channel, retesting the median line of the rising channel. We need to acknowledge also that for a while the price is consolidating. So when the price is consolidating, professional will look for opportunity to sell on the upper side of the channel, and we look for opportunity to buy at the lower part of the channel. So if we want to buy this stock, we will prefer to buy somewhere along the lower part of the channel here, the median line of this blue channel, which that will be a better place for us. In fact, what I will do, I can put a spotlight there. Okay, somewhere here will be better for us. We will not buy here, okay, when the price, you see where it is now, it's a bit tricky. If we want to buy now, okay, we will prefer it, okay, to go above, okay, this the red, the top of the horizontal channel, okay, to retest it, validating that resistance level as a support level, and from them onward we look for opportunity to buy, which means the price break above it and then pull back and start displaying higher lows, higher high. Using a top-down trading method, we can trade. We can day trade this stock. So that's what we see on the monthly chart. So we see the market pattern. That's what we want to know. If you are not respecting the market pattern, what are you doing? You are fighting the market. And you don't want to fight the market. Okay? You don't want to fight the market. Rising channel, declining channel, horizontal channel. Whether you are using Elliott wave, you are using Fibonacci, you are using TSTW24, as well, any trading system, you must not fight the market pattern. Okay? So it's very simple, but to put into use, some traders find difficult to trade. They use a MACD, which we use indicator too, but at the end of the day, you don't want to violate the market patterns, okay? So we see the market pattern on the monthly chart. The next thing that a professional will do, that's what I call Trading Idea Part 2. Okay, there is a video on George Trio channel on YouTube. You can subscribe to our channel on YouTube, and you can, okay, watch the video that I call Trading Idea Part 2. The professional will do something else on the monthly chart. They will highlight the high of the month that has closed, because we are now in June. The month that has closed is the month of May. They will highlight the high of the month of June. They will also highlight the low of the month of June. What I will do, I will remove my blue channel. I will only leave the median line of my blue channel on the chart. Okay, are you with me? I will also remove the spotlight so we don't have too many lines on the chart. I'm speaking slowly, so the video will be a little bit longer, but the reason why I'm doing this is because it's too important and for traders to understand this once and for all. So the line that I've drawn now, I'll color them into pinks to get your attention, because the high is what I'll put into pink. The low, I will color it into green. And the median line is the middle line of the range of last month. So remember, the high of last month is the pink, the low is the green. So I need another line, too many lines, okay? So what I will do, I will leave the red line, which is the market pattern on the monthly chart. I will leave them there for now. Okay, roughly the median line, I'm just using my eyes to measure it. So roughly, okay, roughly somewhere there, okay? That's the black horizontal line. Okay, the black horizontal line is the median line, okay? Remember that the black horizontal line is the median line in a zone of 7156. Okay, which is bringing us also near the lower part of the red channel. You remember the red channel that we draw the monthly chart? You see that the median line of the month of May is very close to the red horizontal line here, which is the base of the consolidation session. So it's not a bad thing. So I'm going to switch my time frame now. So from the monthly chart, we're dropping down to the weekly chart. We want to zoom into the price, so we go to the lower time frame. You can see all my lines here. Remember that the red channel is the consolidation on the monthly chart. This is the top of the red channel. This is the lower part of the channel. Now, the pink line, okay, is the high of the month of May, and the green line is the low of the month of May. Now, this is the line here. The black line is the median line of the month of May. So once the professional highlight the high, the low, and the median line of the month that has closed, they will give priority to bullish signal above the median line of last month, and they will give priority to bearish signal, okay, below the median line of last month. But remember, like you see here, the price closed near the high of last month, okay, which is bullish. If you want to sell, as I explained to you, we want to sell near the red line, which is the market pattern on the monthly chart. So there is a high chance that the professional may push it a little bit up near the red line, or at least near the pink line. Okay, so they will try, as the new month has begun, they will try to retest the high of previous month, which is the pink line. Okay, and if you find a resistance there, they will sell it. If they sell it and the price going down, they will be careful as the price approaching the median line. If you are a bullish trader and you want to buy in this scenario, because we have closed near the high of last month, if you are very conservative day trader, you are prudent day trader, you will wait instead until the price finds support above the high of last month. So because it closed near the high and you want to buy, do not rush. Wait until it goes above the high of last month and find it, which means break above, retest, and turn around. All right? That's how you do it. You will switch to your hourly chart, 2-hour chart, 4-hour chart, and then you will see, okay, a bullish setup or a bearish setup, depending on what you want to do. If the price closed near the low of last month and you want to sell, you will wait for it to dip below that low, to retest it, and to turn around. Break below, retest, turn around, using a market patterns on the hourly chart, 2-hour chart, 4-hour chart, and then you break it down to the lower time frame. Okay, you set up the signal and the low risk entry point. All right, you see now? If you are using a trading system, a day trading system, you must follow the day trading system rules. All right. If you want to buy near support level. If you want to sell, you want to sell near resistance zone. So the high of last month is a kind of resistance. If the price failed to go above the high of last month, it means that the price failed to display a new high. So it's not very, very bullish. If we see, doesn't mean we sell straight away. If we see a sell signal around that zone, we'll buy it. The bullish professional day trader will look for opportunity to buy near the median line. If you want to sell near the median line, you prefer it, because the price is not near the high, you prefer to dip below, break below the median line, retest it, and turn around. Same thing we do near the low. So these are the key levels for this stock. The professional will be watching the red channel, and also the high of last month, the median line of last month, and the low of last month. If you want to know more about Trading Idea Part 2, check our YouTube video, okay? So they do this exercise. These are the key levels they will be watching during this month of June. So they're not going to take trade anyhow. So the bullish trader will prefer to buy above the high of last month. But as they buy there, they know also there is another key level, which is 7447 from the monthly chart. That's the consolidation channel. Swing traders will be better off, okay, if you want to swing trade peacefully, be better off, wait for the price to break above the high, the consolidation high, 740 red line, and then find retest this and turn around, okay? So you want to know where is the best place to buy, where is the best place to sell. If you are using a trading system and it gives you a buy signal, but the buy signal is not in the right place, do not take it. If you see a sell signal and the sell signal is not in the right place, do not take it. All right? So you want to understand where you are, and the professional will do this at the beginning of a new month, which is the first week of the month. All right? During the first week of the month, I want traders to pay attention carefully to what I'm going to say here. So we draw lines, and I show you what is taking place. All right? At the beginning of the first week of the month, there are a lot of preparation. Professionals are preparing themselves for the new month that is starting. So we are in June 2014. A new month has begun, and this is the first trading day, all right? So you see, the month was closed, The month of May ends on Saturday, and the 1st of June was Sunday. So today is the first trading day. So as they come today, they will not just come and start day trading. They will prepare themselves, for the month ahead. Not only for the week that is starting today, but also for the month ahead. That's why they go to the monthly chart, to do all the things that I've done already, and to see the market pattern so they don't violate the market pattern. They will draw their trend line. We can draw trend line also, You don't forget, trend lines. They will draw all these trend lines because I don't want to confuse you. That's why I stop there. I don't want to keep going on and on. All right? So after that, they will prepare themselves for the month, that's preparation for the month ahead. So if you are a professional day trader, you are under a supervisor. So beginning of the month, they will have a small meeting in the morning, and they will discuss what is the strategy they should adopt this month. So if, for instance, the last month, they didn't perform very well, or they have a losing month, they would like to change their strategy, yes or no, So the same thing you will do. So if the previous month you were not doing very well, you want to review your trade. Not only, you don't want to change your trading system. If your trading system is a valid trading system, do not change it and go and buy another trading system. No. You want to review your past trade. So the professional, the first week of the month, will review their past trade, their past strategy, and see is anything they need to adjust, anything they need to improve, anything they need to work on. All right? So this preparation will take place during the first week of the month. So they may decide and say, okay, now we shouldn't be trading this stock anymore. It's too volatile for our risk tolerance. So they may remove it from their portfolio. All right? They may add another stock to their portfolio and say that this stock is more friendlier than the other stock. All right? So, for instance, you are trading some useless stock that are giving you a hard time, and in fact, you see that the stock is not valid for day trading. It's not going anywhere. And you spend your whole life trading that stock only to give your money away. You may decide to stop trading it. It's like myself. I do not trade anymore the Euro Swiss franc. I just remove it from my portfolio and don't trade it anymore. All right? So these adjustment preparation for the month ahead. The next thing that the professional will do, so remember, at the beginning of the first week of the month, there are a lot of preparation taking place in the market by the hedge funds, the bank, the professional. So you want to know what is taking place. All right? So you don't come in during that week and just splash trade all around, but you are very careful and you know what's going on behind the scene. All right? The next thing that the professional will do, they will go again to the monthly chart. This time, they are not drawing channels. They are looking at what? The candlestick patterns. If you want to know more about candlestick pattern, type in Google. Steve Nissen. Steve Nissen is the man about candlestick pattern. So here we see that the price was going down. So we see there was a doji here, which is an uncertainty. We see an inverted hammer, and followed by hammer, and followed by another bullish candle. According to this interpretation, there is a support here. There is a demand to buy. But before you become too bullish, do not forget the market pattern. You trade against the market pattern, you are fighting the market. As I told you, if you want to buy, you know where you want to buy. We discussed it already, and I will not repeat myself. So, though this market pattern is, they will look at the candlestick pattern. Sometimes, like here, you see here, You see here, this candlestick. Suppose we were here, okay? We are on a monthly chart. Suppose we were here, okay? There was a doji followed by, a bearish hammer. Yes or no? This, according to the candlestick pattern, this is a bearish candlestick pattern. You see, the following month, they sold it. This is what usually happens. This candlestick pattern. Doji plus hammer, bearish hammer at the top. So price went up first. I'll be recording video about the candlestick pattern in this year. So the price was going up first. And then we have indecision here. Price failed to display new high. You see the following month didn't display new high. This month didn't go above the previous high. But in fact, went bearish. It's a doji and a hammer. This is a bearish candlestick pattern. Professional will give priority to bearish signal. So suppose we were here, professional will look at this candlestick pattern. And during the first week of the month, so they say we have a bearish candlestick pattern. There are software that can dictate bearish candlestick pattern. So after that, so this month we have a bearish. Suppose we were here, the professional, we have a bearish candlestick pattern at the top of a bullish trend. Okay. So they say priority to sell signal. So you remember what I said to you, preparation during the first week for a month ahead. So if you were here and you understand this, you will not try to buy this stock at all, unless at least it goes above the median line of this candle, because the median line is a psychological price level. Unless, so you'll be very careful. So if you want to buy, if you see this candlestick pattern, you are so desperate to buy, at least you will take only buy signal on or near the median line of this candle here, or above the high of this candle. Otherwise, you are not interested. Whether the TSTW34 gives you a bullish signal or TSTW-SY00 give you a bullish signal, you will just ignore it. All right? So you will be concentrating only on the sell signal. You see, you went down. Now we have another doji again. So suppose we were here. So there's another doji, and we have, followed by a bullish candle. This is a bullish candlestick pattern. This one and this one. But look, the price did not go up. How do you trade this? Remember, at the beginning, suppose you were here and this candle closed, and we are at the beginning of the month of May, all right? You will draw the high, the low, and the median of this candle. So you know where to buy. So you'll be looking for opportunity. If you are so desperate to buy, if you find a support near the low of this candle, or at least above the median line of this candle, there are places where day traders must look for opportunity to buy instead of just buy and sell anyhow. You can scan for 100 stock, do your preparation, and be ready. And don't buy and sell in the void. Know where you can buy. For some traders, whenever we say this kind of thing to them, once they get it, they never look back. They are trading, just get back into online. That's what they need. Guidelines. All right? Guidelines. Okay? So the professional will also check the candlestick. So apart from the preparation, change your strategy, trend or plan, stock to trade, watch list to have for this month. Which stock should we trade this month? Which stock we shouldn't trade this month? Okay? Adjustment of portfolio. What should we sell? What should we get rid of? So maybe a trade is too risky, you get rid of them. This is what we call, trading activity. These are not a real trade or buy stock or sell stock, but they are just, trimming, so to speak, trimming their portfolio or adjusting their portfolio. They are not taking a sell or buy signal. They are just, saying, I don't want this anymore. It lost me already, 1,000 pounds. I take this loss. Boom. All right. I'm tired of this stock. I don't want to trade it anymore. Boom. Out of my portfolio. I will prefer to trade this one. These are adjustments. Maybe we were using a higher percentage of our trading account. We were using 10% before. We say, we cut it down to 5%. We cut it down to 3% of our trading account. That's what we want to do. So these are portfolios. Apart from that, they go to the monthly chart, they draw the high, the low, and the median lines. They pay attention to the market pattern because they don't want to fight the market. Then they check the candlestick on the monthly chart. This is during the first week of the month. All right? The next thing that is bothering every professional trader during the first week of the month is the major economy news. Ladies and gentlemen, I've been posting video on YouTube since 2010, and a lot of traders contact me. What I have noticed, okay, a lot of day traders can day trade, but there are different type of day traders. I do not impose my day trading style on traders. But one thing that is destroying day traders is because day traders are technical traders and they don't want to pay attention to the economy news and to the fundamentals. One of the best places you can go to check the economy news is www.forexfactory.com. It's right here. You click on calendar and you go to it. The red envelope is the high impact news, followed by the orange and the yellow one. Okay? So you want to know when the news is due and what impact it may have on the market. The market is global, and every economy news, wherever it's out, whether in Japan, in London, in Shanghai, or in America, or Bombay, or Mumbai, wherever you are, Saudi Arabia, Dubai, wherever you are, these economy news, can affect one or two financial instruments. And all financial instruments are interconnected with the commodity market, forex market, stock market. They are all connected because they are all coming back to money. All right. So remember that. Okay. So the first week of the month is crucial for traders to check the economy news. I want to show you here, traders that are following us already know this. The economy news that we must pay attention to this week, which is the first week of the month, which economy news you should always remember during the first week of the month. I need to remind traders that during the first week of the month, it's very tricky to day trade. I also explained to you that the last week of the month is the best time for day traders. But the first week of the month is a very difficult week for day trading. If, you just ignore everything that I'm saying to you now, you may find it difficult. But if you understand what I'm saying to you now, you may navigate through this messy market. The first economy news that traders must remember during the first week of the month is coming out during the first Wednesday of the month. Here it is. The ADP non-farm employment change is due at 8:15 a.m. Eastern Time. That's 1:15 p.m. London time. This economy news, every first week of the month, a lot of day traders lose money. Suppose they are trading Monday, Tuesday, and then Wednesday they don't know that this economy is due. Or even as the week is starting, the first week is starting, professionals are preparing themselves already today, preparing themselves already for this ADP non-farm employment change. They will check the previous figure, they will check the forecast, they will be paying attention to the economy news, and they will be trading carefully. But ordinary traders, some of them do not know, some of them know, like I knew myself before, but I disregard it until I learned it the hard way. Okay? So it's up to you, what you want to do. ADP non-farm employment change. First Wednesday of the month. Sometimes they may move it to another day, but you want to know when exactly this is due. But very often, the first Wednesday of the month. So this economy news is bothering all market participants, hedge fund banks, during the first week of the month, and they are trading carefully. My advice to new traders is that if you are very new trader, you are beginner trader, you may decide to take the first week of the month off completely. All right? Just go away. Or if you want to day trade during the first week of the month, you may wait. I don't know. My advice, in fact, you can just take it off, because it can cause you all sorts of damage. If you are just going up and down, you don't know what's going on. It can really, confuse a lot of day traders, because especially if you are a new trader and suppose you start day trading in the last week of the month and you have a nice trade, beautiful trade, everything went beautifully, you were trading like God, you were trading like a genius, you were trading like the expert, your decision were perfect, and boom, the first week came and you give everything back. Not only that, you wipe out your saving or your trading account. And you wonder what's going on. Why usually take place? Traders think that it's their trading system that didn't work, or their trading strategy did not work. So they go and buy another trading system, or they change their strategy completely, and they build another system, and they go round and round and round. But The bottom line is that, okay, there are few things they do not understand. This is what we are talking about here. The next economy news that professionals are watching, okay, the first week of the month, here it is, employment claim. It's often used every Thursday, which I talked about when I was posting a video that I call How to Day Trade on Thursday. But, ladies and gentlemen, all right, when the first week of the month comes, though this economy new employment claims is due every Thursday, the first week of the month, this economy news becomes too important. So you don't want to discount it. So on Thursday at 8:30 a.m. Eastern Time, okay, not only the first week of the month, every Thursday almost, but when it comes to the first week of the month, 8:30 a.m. on Thursday, we have the unemployment claim, and it becomes too important. It becomes too important, okay? Do not ignore it. The last economy news that, in fact, if you are struggling and you are not sure about your day trading, you should run away from or wait until the news has passed, is this one. The non-farm employment change is due at 8:30 a.m. Eastern Time on the first Friday of the month. Sometime they may move the date, but when the first week of the month has started, you want to know where and when, okay, this news is due. You want to check the previous figure, 288, so the forecast is below the previous figure. The speculators will start being bearish, but if you want to know more, you click on this envelope here, you open and you read it, but you don't want to trade the news, you want to trade the price. Market pattern will not fool you. Top-down trading method will not fool you, and, okay, you take it like a professional trader. But this economy news is too important. That's what I call the daddy economy news. It will affect the forex market, the commodity market, everything. And you see this tall candle, volatile candle. In fact, I have recorded a video on YouTube, how to trade a non-farm employment change on George Leo channel. All right? So, this economy news usually change the market. After its release, it takes a bit of time before the dust will settle. It will go on even up to the following week. So after this news is released, you wait. Come the next Monday, okay, the following Monday, okay, Tuesday, you will need to be very patient because the market, some, okay, hedge funds, okay, banks make long-term decisions. And if, for instance, they were bullish towards the market, and the economy news, non-farm employment change, become very, very bearish, they have to adjust their portfolio. They have to close some trade. They have to minimize some risk. And this can play on the market, okay, for another week. So you want to know the importance of this economy news. It's a job creation in the United States. But you may say to me, oh, I don't care about the Americans. But this is the world market. If you are trading, you must care about Americans, care about the Chinese, care about the Europeans, care about, okay, anybody that is in the market. So these three economy news, you must not forget them during the first week of the month. I don't want to go into the detail about how to trade them because I have posted a video, that's what I say to trade. Subscribe to our YouTube channel, George Leo channel. Go around, check all the videos, and you will see them there. I will not dwell on this. So during the first week of the month, professionals are paying attention to this economy news, all right? The next thing that is worrying the professional during the first week of the month is that they want to start on a winning note, okay? So remember, this weekend I received a nice email from a trader, that is Elliott Wave trader. He told me that he was using a demo account for nearly 6 weeks or so, and he placed his first trade, and he was successful using the Elliott Wave. Now, that's great. You want to start on a winning note. Now, you can see the impact this trade may have on this trader. He was using his demo account before. Now, he used real money for the first time, and this trade happened to be a winning trade. Not only that, he controlled the trade carefully, and the trade hit his target that he set. Because what I say to trader, if you are day trading, as you are entering the trade, you must set a target. The gentleman set his target, and enter the trade, and the target was hit. Though it came out earlier, but it was a winning trade. His first trade was a winning trade. That will affect you, that will boost you, that will give you courage. On the same thing, during the first week of the month, professionals want to start on a winning note. If, for instance, you are paid to trade for hedge funds or for a bank, okay? And maybe last month was a horrible month, you have a bad month, okay? And your supervisor is not smiling to you, or your boss is not smiling to you, because you end up being the worst trader of the month or something like that. So as a new month has begun, you want to start what? On a winning note, yes or no? Every trader wants to start the month on a winning note. So remember that first week of the month, professionals are very careful. They want to take the best setup. Useless setup, put them aside. Let somebody else to trade it. Don't waste your money on it. Spend most of your time on the best setup. Use the trading triangle. The market first, the sector, the economy news, the market first, the sector, and the financial instrument itself. The economy news, the fundamentals, okay, and the market leader, this is what we call the inside of the trading triangle. So you want to start on a winning note. All right? This is important. So a lot of new traders, why they get into trouble? Because the professionals are very careful during the first week of the month, and they want to trade smartly. So if you are a new trader, you are just going around doing other things, the professional will punish you. Let me give you one example, okay? Suppose, okay, the professional are waiting for the price or a candle to close. We allow the price to come to a resistance level or near the edge of a trend line, okay? And your stochastic is overbought, when the price was somewhere here, and you sell. Professional will not sell here. They will be very patient because they want to start on a winning note. They want to trade on the edge. Go to www.stochasticmarket.com, click on trading on the edge. They wait for the price to come to the lowest risk point. So a lot of new traders get into trouble, not only because of the major economy news, but also because professionals want to start the month on a winning note, and these traders, they are just upsetting the professional. So they will see sometimes the price going up because they want the price to come here. As the price going up, ordinary traders start selling, so the price start consolidating. The next thing you see is a tall candle that takes them out to bring the price to where the professional want to sell. On the other hand, if they want to buy, they want to buy on the edge again, patiently. They are very careful, okay, and they want to start on a winning note. When the market it becomes very, very, okay, cautious, when a professional want to start on a winning note, a lot of new traders or ordinary traders get into trouble because the professional want to go by the book, so they don't cut any more corners, and they want to do it properly, and they will trade on the edge. The next thing that we want to understand, which I talked about already, is the readjustment of strategies. How was last month? Is the strategy working? Can we modify the strategy a little bit? All right. If it's a valid system, do not change it. If you purchase a trading system, use it according to the rules. If you change the rules, you are trading a new system. You can adjust your strategy. One example, for instance. Suppose, okay, a market, New York is open or London is open, okay? And as soon as the market is open, you see a sell signal and you sell. Or you see a buy signal, okay, you buy, okay? And you notice that, in fact, you should wait at least 30 minutes, okay? 30 minutes for the market to settle first before placing your first trade. So if you were just buy a sell at the beginning of the market straight away, boom, the market start and you buy, you may say to yourself, okay, I want to adjust my strategy. You are not changing your strategy. You say, okay, instead of buying straight away when the market open, let's be patient. Give it 30 minutes to settle, and then we'll look for opportunity to buy and sell after the first 30-minute candle is closed. You remember what I said? A candle must close. So as the market is open, allow the first 30-minute candle to close at least. That will give you a bit of idea what's likely to take place, okay? It's not too late, okay? The market just opened, 30 minutes gone, it's not too late. In fact, that's what the professionals are doing. So professionals are adjusting their strategy at the beginning of the month. So they will also try to see their plan, okay, the plan that they use, okay, whether they should change their plan, okay? One of the plan, they can say that, okay, we want to buy the euro, okay, at the same time buy, okay, the dollar Swiss franc, okay? That can be a plan or a strategy that they are using. Or they may decide, okay, to date, when they are day trading, they don't want to buy more than, okay, have more than 100 trade, okay? They may have a different plan. They may look at it and say, okay, you want to change it, or they may want to change their tactics. Okay, there are different tactics that professionals are using. Sometimes they want to buy, they will sell first before they will buy. It's going on in this market, okay? They may decide, okay, to continue with their previous strategy. So you want to know what is happening during the first week of the month. I've said enough about why you need to know the preparation for the month ahead, okay? The monthly market patterns, okay, the monthly candlestick pattern, okay, the major economy news, the non-farm employment change, the ADP non-farm data, okay, the unemployment claims. You want to know when they are due and how they can affect the market. If you are a new trader or beginning trader, you can decide to stay away. And you know that the professional want to start the month on a winning note, and they will be very, very careful. And when this is taking place, a lot of new traders or beginners or traders that are struggling may get into trouble because they face the professional. It's like going into the ring with Mike Tyson when you are just, okay, amateur boxer, okay? Another thing before I close this video, a day trader is a short-term, okay, market participant. You are not long-term market participant. You want to be busy taking profit during the first week of the month. A lot of day traders get into trouble during the first week of the month because they don't like to take profits. So they see the trade working beautifully for them. They say it's going to go up. One of the ways to control it, as their trade become profitable, you move your stop loss to break even. So if your stop loss is 20 pips and the price moves 20 pips up, you are bullish, you move your stop loss to the entry point. All right? If you are selling and your stop loss is 20 pip or 30 pip or 40 pip and the stock moves 40 pip, like your stop loss, you move your stop loss to the entry point. It's because during the first season month, the market is volatile. It's going ups and down, ups and down. Hey, because everybody is careful. No one wants to lose. Everybody wants to start on a winning note. Okay? After those major economies are released, everybody know that, okay, now we can trade. So one of the strategy a day trader can adopt is that you want to keep taking profit. You don't want to have too many losing trend. You don't want to let, one thing also you want to avoid is that when a trend happens to be a losing trend and is approaching your stop loss, don't end up moving your stop loss all the time because it can cause you trouble. If you move it once, if you move your stop loss once, which traders do, I do it myself. Sometimes I move my stop loss successfully. But during the first week of the month, be careful. Check your trading account. Are you losing? If you are losing, if you lose 25% of your trading account during the first week of the month, just go. Go. Come back next month. Come back next week. All right? Go straight away. If you lose 40% of your trading account, the warning bell is ringing. Go. Lose 50%, okay? If you want to, all right? Switch off your electricity completely or, okay, switch off your internet or run away, go somewhere else. It's better for you, all right? So the strategy is to take profit consistently. So, or secure your gain. Secure your gain during the first week of the month. Keep securing your gain. Be what I call defensive. Defensive. Because you don't know how to fight. At least you can, if you know how to defend yourself, you can survive. Okay? So be very defensive. Keep taking profit. So don't have too many trade opens during the first week of the month. This is crucial. So if you have, okay, maybe one or two trade, okay, keep your eyes on them. If the web one is working beautifully, okay, secure your gain, okay, which means if you are 100 pip in profit, you can move your stop loss 60 pip, okay, so you secure that at least. You don't leave it there and then you see another tall candle, wipe it out completely, even end up being a losing trade. You don't want that. You don't want that, okay? It's all in the mind, it's all a mind game, and it will affect you. A winning trade becoming a losing trade will affect a trader. A trader do not like it. That's why they move their stop loss to break even. The most important thing is that you don't give your cash to somebody else, because if you lose, all right, suppose, okay, a trade was working nicely in your favor, so you are on the winning side, you gain, okay, $100, $200, $300, $1,000 the profit, or pound in dollar, okay, you are in profit. Now you don't want to give that back. But if, for instance, out of the blue, a tall candle, wipe it out completely your profit and also your stop loss, which means you give away your profit and also your own money, that will affect you for a while. So keep taking profit consistently. I'm not saying that as soon as, but secure your gain, be defensive during the first week of the month. Before I close this video, as we were talking about Starbucks, I want to highlight something else. I'll remove all my line on this chart, okay? And we will go directly to the yearly chart. You can see that one thing I said to traders at the beginning of the year is that if a stock is closed near the high of last year, you can see that this is 2013, this candle here, 2013. The price closed near the high of 2013, which is bullish. But if the price failed to go above the high of last year, in this new year, 2014, here this 2014, as we started, the price opened here, it just went down. It couldn't display a new high. We will give priority to bearish signal until we reach the median line of this candle. You remember, the high, the low, and the median line. These are key levels on the yearly chart. This stock, as you can see, is, in fact, I will use my Fibonacci drawing tool to highlight the 50% Fibonacci retracement level. You can see that this stock is below the high of last year. In the mind of professional traders, it means that priority to sell signal. So when they are day trading, as we have discussed now, if they are buying, they are careful. They know that long-term market participants would like to sell, okay? The long-term market participant would like to sell. But if, as a day trader, well, our concentration is on the short term, if you see a buy signal near a value support, like I showed you at the beginning of this video, we can buy. But we know that the long-term market participant would like to sell us. We are very careful. So in this scenario, I will say to trader, prior to sell signal, but you can see that the price pulled back near the median line, and some people bought it. Let's go to the, I want to call out the median line now, into orange. And let's go to the daily chart and see the reaction of the price near the median line. This is a psychological price level. So they will sell because it closed near the high. If you find a resistance there, yes, they sell. It's normal sell. And now it's coming near the median line. They will take profit. And if they want to buy, if they see a buy signal near the median line, they will buy. If they want to sell again, they will allow it to come, okay, below, retest and around. Let's go to the daily chart, and now you will see the reaction of the price. You see my orange line, my beautiful orange line from the yearly chart. Can you believe it? From the yearly chart, here it is. You see here on this day, after the price went below the median line, you see here, yeah, that's my median. You went below it for a while, you see. Yeah, I'm on the daily chart. Yes, you see, you went below a little bit, and you see, you went back. No, hold on a second, ladies and gentlemen. Hold on a second. Yes, you see, this is 2014, my apology to traders. Here it is, you see. It came near the median line for the first time. Okay. Here it is. The median line is here, you see, came near. All right. And then again, near the same zone. If I place a volume indicator on this chart, we analyze the volume. Again, and display a double bottom near the median line. Day trader will be happy to buy here because we are near, okay, a bullish zone. If you pay attention also here, the price gap up here, this section here, see the gap line, usually the median line of the gap. Do you know about that? This is about candlestick pattern again. Price gap up, draw a vertical line during in the gap session, and put a median line the middle of the gap. It's a support level. See here, that's where the price did stop. Touch it, couldn't touch this one here. If I adjust my line correctly, see the median line of the gap. Boom. You see, this is where we are now. So do not forget the trend line. So we will draw a trend line like this. So for today, as you can see, the price is on the edge. So if you want to buy today desperately, I think it's better for it to retest again at least this one and before. If it goes above it, allow it to go up, okay. And then to pull back and retest. As a day trader, you want to trade on the edge. So if you're a bullish trader, something like this, break a bow, retest, and then turn around using a multiple time frame limiter, that's how you want to do it. But here it's on the edge. If you receive a sell signal here, yes, it's a trend bearish trend line. Watch it, okay? But as I show you on the yearly chart, priority to sell signal, long-term investors will give priority to sell signal until, okay, we find a valid support near the media line. This is about how to day trade the first weeks of the month. I hope you are learning something for this video also, and we put into use, okay, to make excellent day trading decision. We are the TSTW 24 traders. If you like these tutorials, okay, give us a 5-star, 4-star, thumbs up, thumbs down, okay. Any comment, put it below. Any question, if you are TST trader, please get back to us and we will, okay, get back to you. Until the next time, enjoy yourself and be very happy.